the discussion on markets forward with Krishna Sanghavi of Manulife Mahindra AMC joining us. Krishna, afternoon, a furious rally. 19,800 is here, almost 1,000 point from that Thursday lows. Is the market getting the rally is justified because there's a genuine change in narrative on rates front globally, and people are deriving that probably by mid-year rates in India would also start heading lower. Markets not too bad, earnings not too bad already.
Yeah, hi Ajay. I agree. Very broadly, markets are moving too fast. At the same time, if we just step back and say last 2 months, we were actually back at where we were 2 months back. And that's not only true for India, it's globally. So there are two variables. One variable is, quite a bit of high frequency economic data keeps on changing, keeps on coming every day, which is the normal part. I think the second part is slightly more worrisome, not only in India, but worldwide maybe, is the prevalence of too many people focus on the shorter end of the curve in terms of, maybe leverage positions on trading, maybe investment with a very quick, a short-term view. I think those two combination makes some of this volatility part and parcel of what we see daily. It does not really change the fundamental picture of, India doing well and creating wealth for investors. However, it creates its own, high churn or high quick returns or a quick loss kind of scenario for traders. And that's what, people just need to be aware that if you're a trader versus if you're an investor, the current market does not really offer a similar, payoff for both the side of people.
Also, I must congratulate you. I mean, the great performance of your small cap fund. Do you think the correction in the small caps, large caps, small cap, mid caps is over now, and at least the ones which are backed by earnings will have a good run from here on?
I agree. Yeah, we had a nice launch maybe exactly 11 months back or so. We actually had our small cap fund somewhere in December 2022 started investing. Fund is done pretty well right now. I guess coming to stock specific, it's always going to be stock specific markets, because for every segment of economy, some set of corporate, some set of companies or sectors are a beneficiary. Other set of people are actually sufferers, because that's how economic what do you say, value creation keeps on shifting between consumers and users. So for example, if banks are the resource owners, the corporates are the resource borrowers, and to an extent high interest rate favors banks while it disfavors the corporates who borrowed. So that economic part does play out, and that's where we believe yes, there is a value across spectrum on sectors, on stocks, whether it is large cap, mid cap, small cap is one way to look at it. But at the same time, even sector wise, there are pockets of opportunities which one can invest in the markets right now also.
There's a power renewable, green renewable NBFC IPO which is getting launched. You were also positive on power space for some time now. How are you analyzing the valuations of power lenders to start with, and then the generation companies, be it renewable or even legacy?
Sure. If you look at the macro opportunity for power is so strong that India is right now more or less balanced on what power we need currently versus what power we can produce as a country. Maybe a 5 to 10% deviation in demand can actually alter the problem for India. So you need to create capacity, and that's where the macro picture lies, that if India is going to grow, we need more power consumption, and that power capacity needs to be created now. The process needs to start now, so that 3 and 4 years down the line, we will actually have enough capacity. You speed further, a thermal takes maybe 4 years, 5 years to set up, while renewables like solar, wind possibly takes a shorter time of 12 to 18 months period. And that's what lies opportunity in the absolute next 3, 4, 5 year period. You need to create capacity across the spectrum, renewables as well as thermal. Come to power finance. Yes, power finance as a segment has a tremendous opportunity, because the sheer amount of capital required in the generation as well as in the transmission and distribution is going to create an opportunity for power companies to lend. The way we look at valuation right now is also partly a function of the capital adequacy. So if there are companies operating on a 22-23% adequacy on capital and generating 20% plus ROEs, I think they're pretty in a good shape to take part in this entire power sector lending opportunities and participate thereon. And mind you, today we discussing a situation where there are not too many issues about troubled assets or asset quality pains also. So in a way, it's a low credit cost environment, high credit growth environment, which actually works very much in favor if you have the right amount of capital, which is what some of these power finance companies have.
One last word. I want to understand, last few years, the run-up for lenders, especially banks, has been very good. Do you see that mid next year onward, if indeed rate cuts start here in India as well, because first half of next year is where expectations are building for US rate cut cycle to start. Do you think NBFCs could have a good time going forward, because they tend to generally benefit in a receding rate trajectory kind of environment?
To an extent, yes, because they are the maybe slightly more wholesale borrower of money rather than retail, in the sense that banks have far more reliance on CASA. So partially it can be true, but at the same time, have a situation where in a falling rate atmosphere, maybe your NIM are bound to compress, because if you look at some of these NBFCs, they really had a good time when the rates were going up. It's going to be tricky unless the asset liability mismatch of NBFC specific can be analyzed differently. We will always have a stock specific answer. But macro basis, yeah, some benefit can happen to wholesale borrowers of money, when the rate environment goes down but at the same time, we need to worry about liquidity. Just because there are going to be rate cuts, we may not really have the liquidity environment, as favorable as what possibly it was 2 years back. So that's some area which is a little bit of uncertainty right now.
Right. All right. We'll let you go on that one, Krishna. Thank you so much for your time today chatting about markets and the select areas which are likely to benefit from the changed macro environment and realities. But there's one stock which